Namaste and welcome to part C of cash flow under simple solution series. Today we are taking up a illustration from page 299 of CMA study notes. The illustration is copied here fully. This is only as a matter of courtesy. And we will be using the same template, and in this problem the amount is in rupees. Method: in respect of operating activities, based on the details given, it is possible to work out both direct and indirect. What we will do is we will follow our indirect template and finish it. At the end of the exercise, we will also do it under a direct method so that we have a comparison as to how the process is different and which is widely used system. In this 2015 and 2016 alignment of columns, first column is previous year and second column is current year. There is only one adjustment at the end, cost of equipment sold, which means we have to prepare an equipment account at the end with all details which are coming in between. And as we are aware, if an item is cash and operational, that is not relevant to us. We are here taking either non-cash items or non-operational items for treating them specially. Net sales is a cash item, we are not taking. Cash and operational. Cost of sales, cash and operational. First item that comes is depreciation. That way, we will be first posting the profit and loss account balance. 15,18,000 moving to 16,38,000. Net addition of 1,20,000 is the profit. And the first non-cash or non-operational item is depreciation. We will be taking up depreciation as the next item because it is a non-cash item. Though it is operational, it is a non-cash item, and we will be removing it. And depreciation, as indicated in the problem, is 6 lakh rupees. We will be just putting 6 lakhs against depreciation. And next item after that is salaries and wages, is cash and it is operational. Operating expenses, cash and operational. Third item that comes is provision for taxation. There is a presentation in respect of taxation which we remove provision and we show it separately, and therefore we remove provision for taxation, we calculate taxes paid. Hence the second item will be provision for taxation. Provision for taxation is at 8 lakh rupees. It is getting 8,80,000 getting posted here. And after that we have next item coming is profit on sale of equipment. Now, profit and sale of equipment is a non-cash item. We take it, it relates to equipment, it has to pass through equipment account to find out the cash flow. Let's go there. 1,20,000 is profit on sale of equipment, and next item that comes in the line is dividend declared and paid during the year. This is, though it is a cash item, it is a non-operational item. It relates to investing activities. Therefore, we will take it out. We will place it down below. Simultaneously, it is a matter of shifting. It is 7,20,000 moved from operational into financing activities. And with this, we have covered from the profit and loss account the various items, and hence we can put a subtotal here as 20,80,000. Then next We will go in the same order for the sake of control. Land as an asset. We will take under cash flow under investing activities the fixed asset. And how does it come into picture? Its value has increased from 4,80,000 to 9,60,000, and an addition of 4,80,000 means we have purchased land and our cash has gone out. 4,80,000 cash has gone out. We are showing it as negative. Then comes buildings and equipment. This buildings and equipment has got adjustment entries to be passed for sale of equipments and profit on sale of equipments. That we have to work out as to how much is purchase of equipments, how much is loss on sale, how much money. Now let's study buildings and equipments account and its various transactions to ascertain what is the purchase, what is the sale transaction, and other details. Building and equipments opening balance is 36 lakhs and its closing balance is 57.6 lakhs. And during the year, we have sold equipments worth 7,20,000. This 7,20,000, we have to route it through a separate account to find out what is the actual sale proceeds received. We move it to equipment sold account, buildings and equipments account transfer, 7,20,000. Then we find that there is a profit on sale of equipment of 1,20,000. And along with this, we are also given accumulated depreciation account whose closing balance, opening balance is 12 lakhs, closing balance is 13,20,000, and during the year there is a debit of 6 lakhs in the profit and loss account, and that gives us a balancing figure of 4,80,000 to be the depreciation pertaining to the items sold, because profit and loss account is charged and we have a closing balance. The only transaction possible is removal of depreciation to the extent of sale, and regarding the sold item, the depreciation is 4,80,000. In that case, in case of buildings, there are no other transactions. Opening balance, closing balance, disposal. Therefore, the balance between these 36 lakhs became 57.6 lakhs because after selling 720,000, we purchased balancing figure. Therefore, cash flow under fixed assets will be purchase outflow 28,80,000. Under equipment sold, you had sold an item with the original cost of 7,20,000. It had a depreciation of 4,80,000. You made a profit of 1,20,000 on it. 8,40,000 minus 480, the cash that you received is 380. This is once again a cash flow. These items, these two items will go into cash flow as one is an outflow. 28,80,000 is payment for purchases. 3,60,000 received for sale of building and equipments. This equipment on depreciation of sale is already shifted here. That way, we come back to the cash flow. Purchase of equipment 28,80,000 as we calculated. Then 3,60,000 is the amount received from sale of assets, and with that we have covered fixed assets under investing activities. We can put the subtotal of 30 lakhs as the net outflow under investing activities. Next comes cash. Cash and cash equivalents at the beginning of the period. If we look into beginning of the period, our cash and cash equivalents was 6 lakhs. And after that, we have got debtors. Debtors comes under working capital changes. Debtors increased from 16 lakhs 80,000 to 18 lakhs 60,000. When debtors increase, there is a cash outflow. We are giving credit. Therefore, 1 lakh 80,000 is the outflow. Next in the line is the stocks. Stock has moved from 26.4 lakhs to 9.6 lakhs, means we have liquidated collected cash. There is an inflow, and that inflow is 26 lakhs 40 minus 9 lakhs 60,000 is 16 lakhs 80,000 cash inflow. Next item is advance. Advance has moved from 78,000 to 90,000, means we have given more advance during the year, that is 12,000 is an outflow. With that, we have covered the asset side. We go to liability side. Share capital. Share capital is from 36 lakhs to 44.4 lakhs, 840,000, and that completes the financing activities. We can put the subtotal there. Sundry creditors. Sundry creditors is the loan that we take from our suppliers. It has fallen down, means from 24 lakhs we have repaid 60,000, and therefore creditors have fallen. There is an outflow of 60,000. Next item is outstanding expenses. Outstanding expenses from 2,40,000 to 4,80,000, means we have availed credit. There is an inflow of 2,40,000, and next item is income tax payable is there. We can put the subtotal still now. For income tax payable, what is the income tax paid? Here we are talking of cash flow. We had taken provision. We are supposed to show how much income tax we have paid, but what is available in the balance sheet is income tax payable. For that, we have to prepare an income tax payable account. When you prepare it, it's so simple. Income tax payable, opening balance is 1,20,000. Closing balance is 1,32,000. And as per the details given from profit and loss account, provision made during the year is 8,80,000. Differential figure is the cash flow, means we have paid taxes to the extent of 8,68,000. You can have this ledger account. Based on this, you can pass an entry, make an entry of 8,68,000 as income tax paid. With that, A, B, and C are through, and we put total impact of the cash flow, inflow and outflow. Net increase in cash and cash equivalents during the year is 120,000 or 1,20,000, and our opening cash balance was 6 lakhs. We have to just add the two. The total is 7,20,000 as the closing balance. The 7,20,000 has to be matched with the balance sheet, and the balance sheet figure of closing balance is 7,20,000, and that brings the problem to a successful close. But this working we had done on indirect method, but there is not a great difference between the two. Now let's get into how do we work out under the direct method or the first method. We prepare here three major accounts. One, debtors account. Number two is stock and advances account, and three, creditors for purchases account. For simplicity, we can presume that in a factory there is a plant where the manufacturing takes place. Here all the expenses are incurred in manufacturing. After the manufacturing is over, it is transferred to stock and advances account. And from here, the warehouse, this is the warehouse actually. And from here, the dispatch takes place to the dealer or customer. And how does it work? From the dealer or customer, we receive cash. And at the plant, we spend cash. Simple. While preparing these three, our whole purpose is to find out how much money did we receive from our customers and how much money did we pay to our creditors for purchases, that is suppliers, our employees, and all other expenses. For deriving these two, for convenience, we make three accounts. Let us proceed. How do we do? First, debtors account let us prepare. Debtors balance is 16 lakhs 80,000. Second, there is a net sale of 252 lakhs. And we have a closing balance of 18 lakhs 60,000. If you go for the balancing figure, it is very simple and clear. Your opening balance was 16 lakhs 80,000. You sold 252 lakhs. Still you have got yet to collect 18 lakhs 60,000, means you collected 250.2 lakhs, which is the balancing figure, and you got your answer right. That is the inflow collection from suppliers, our customers. Okay, let's go further. What it says, stocks and advances at the warehouse. What was the opening balance at the warehouse? We had a stock of 26 lakh 40,000, advances of 78,000, and whatever we sold here at 252 lakhs, we transferred it from the warehouse at cost of sales. That cost was 198 lakhs. That is what is appearing here as cost of sales. Cost of sales is what we sent it to customers, is 198 lakhs. Fine. Then we have a closing balance of 960,000 and 90,000. We had this in the beginning, opening. We transferred this to warehouse. This we hold in the beginning. Means how much did we receive from our plant? We received from the plant the differential. 181 lakhs 32,000 worth goods were received under stock transfer from the plant. And what happened in the plant? We had opening balance of sundry creditors, outstanding expenses 24 lakhs and 2 lakh 40,000, and we transferred from the warehouse, from the plant to the warehouse 181 lakhs under stock transfer. This is the figure which we are taking here now. The arrow is the other way. And closing balance, which is due to creditors and outstanding, is 23 lakhs 40,000 and 4 lakh 80,000. Understand the transaction. At the plant, we had this opening balance to be paid. We paid salaries and wages. We paid operating expenses. We also transferred goods worth so much to the warehouse. And we still have balance things owing. What is the difference? The difference is what we actually made as cash payment. Therefore, in this account, we get to know how much is the cash outflow. And this is a transitionary account for the sake of control. Warehouse neither receives nor pays money. It is collection from debtors, payment to creditors. And what we receive here is 211 lakhs 52,000. And with that, we have got the two figures ready. And having prepared the three accounts and understood which are our collections from customers and what is the payment that we have made to our suppliers, we make the posting in the cash flow. Only two entries. First entry is cash receipt from customers 250.2 lakhs and cash payments 211 lakhs 52,000, and that gets us cash generation net of 38 lakhs 68,000. This is how the posting takes place. And we saw here now, this is what we prepared under indirect method throughout the exercise. This is what we just now prepared, cash receipt and cash payment. And as we will observe, amount is the same. Difference is only in this portion, the way we pile up the accounts and the way we club accounts. Always more transparency comes when you give a flow with breakdown. When you consolidate, it may be convenient, but for an investor, it is not that transparent. Therefore, indirect method is more comprehensive and hence it is preferred. If you see the difference of method 1 or method 2 or direct method or indirect method is only in respect of operating activities. It had nothing to do with either investing or financial or income tax paid. We will see the difference only in up to this area. Only 2 entries consolidated. Here breakup of items, but the total impact cash generated is 38,58,000, 38,68,000. I hope we have understood how to solve a problem both under direct method and indirect method. And direct method involves just preparation of 3 accounts wherein you put all operational items and generate how much you received, how much you paid. Put that as 2 line entries and ensure that it takes care of all other principles. Thank you so much. Thanks a lot.